Hello, welcome to the European Open Briefing for Tuesday, December the 19th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be having a look at the latest developments in the currency markets today. So we're seeing most major pairs relatively steady this morning, even though the US tax plan is getting closer and closer to getting passed in Congress. The dollar is unmoved, however, as many investors remain cautious about the impact of the tax cuts on the US economy. On the other hand, US equities continue to rally. We saw another record close on Wall Street yesterday, as US companies will be the main beneficiaries of the new tax plan. But overall, we are seeing a fairly thin trade ahead of next week's holiday period. The euro and the pound are firmer this morning, mainly on the back of the weaker dollar, and so are the Australian and New Zealand dollars, although the Aussie was also lifted by the RBA's meeting minutes, where they appear to be a bit more confident about the economy. So let's start now with the dollar. We can see that we had that brief gains on Friday when the Senate and the House reached a final deal on the tax plan. We saw then dollar yen and the dollar index retreating slightly yesterday before rebounding a bit today. So all in all, dollar has been pretty much range bound. Dollar yen is currently trading around 112.50. The dollar index is slightly weaker at around 93.60. So the main boost yesterday to the dollar came from, after the remaining two senators, undecided senators, said that they will vote in favor of the tax bill, although we might see one or two absent votes, in particular John McCain, who will likely miss the vote. But despite that, the Republicans should have enough support in the Senate to pass the bill. The House of Representatives, where Republicans have a bigger majority and it's less of an issue, they're expected to vote at 18:30 GMT, and the vote in favor of the tax bill is pretty much guaranteed. And the vote in the Senate will likely come much later in the day, or quite possibly tomorrow. So we saw the three major US indices, the Dow Jones, the S&P 500, and the Nasdaq, all of which closing at another record high yesterday. And this has also boosted equities in Asia and in Europe as well. Though the dollar remains fairly subdued, as I said, many economists are questioning how much of a boost the US economy will get from the tax cuts. And dollar weakness is boosting gold prices. We can see gold has been heading higher since late last week, despite the tax plan moving closer. The main reason why gold is going up is on those fairly dovish projections by the Fed about the pace of rate hikes in 2018. The Fed is projecting that the US economy will grow by just 2% by 2020. That's in contrast to Republicans' forecasts about US growth from after the tax cuts, which they say should boost the economy to grow by around 3% in the long term. So unless we see the Fed moving up its projections, the dollar might fail to get much of a lift from the tax plan, although the dollar's long-term prospects are still fairly bullish, and the reason for gold's gains in the past few days could be on the back of short covering. We should also have in mind that equities remain bullish, and now we have another attraction for investors, Bitcoin. So all of that will also likely be limiting the appeal of gold in a much more medium term. Moving now on to the European currencies, we can see euro and the pound slightly up today versus the US dollar. The euro is back above the $1.18 level. We had slightly disappointing German IFO business surveys, though the euro still managed to hold on to its gains, as overall the the business survey indices, the I4 indices remain close to November's all-time highs. The pound is retesting the 1.34 level. It briefly rose above it earlier today. So we did see a bit of a sell-off in the pound following that Brexit divorce deal last week at the EU summit. Prime Minister Theresa May told lawmakers yesterday that the transition period will likely be 2 years, where during that period they will have to abide with EU rules, and the UK will also have full access to the single market within that transition period. But the EU chief negotiator Michel Barnier warned that if the UK chooses to leave the single market after Brexit, then UK financial service firms cannot keep passporting rights to EU services sector to the services sector within other EU countries, and that's one of the main attractions for the UK's financial services sector, which could be hurt, or most likely, which one of the biggest losers out of Brexit. And we will likely hear more about what kind of deal the UK will be sticking with the EU post-Brexit, as May begins formal discussions with senior ministers on the exact type of Brexit deal they will be seeking. Let's look at the Australian and New Zealand dollars now. We can see that they're both up this morning but remain off last Friday's peaks. The Aussie had reached a 5-week high of 0.7694. It was boosted today from the RBA's December meeting minutes, where the RBA said that recent data had increased confidence there would be further progress on unemployment and inflation. This has somewhat boosted the odds of a rate hike in late 2018, and that's why we're seeing a firmer Aussie this morning. The Kiwi, the main driver for the Kiwi was the appointment of the new RBNZ head. This morning we had disappointing consumer confidence survey data from Westpac, which showed a dip in consumer confidence in the fourth quarter. But there are expectations that at the dairy auction later today, we're going to see a pickup in dairy prices. So this is supporting the Kiwi at the moment, which is currently trading just about the $0.70 level. And finally, let's have a quick look at the South African rand, because it's been in the news recently, mainly because of the African National Congress Party electing its new leader. There are hopes that Cyril Ramaphosa will carry out much needed reforms to boost the South African economy, which hasn't been doing too well recently. And back in November, we saw downgrades to the country's credit ratings. The rand has surged to 9 months high of 12.5379. It did fall back mainly on some concerns about who will be in the new leader's team, because he didn't win with a big enough majority, but overall, it does represent a sudden turnaround for the rand, given the slow deterioration we've been seeing in the South African economy over the past months. And finally, looking at today's economic calendar, we can see the German data there, the I4 business climate coming in just below expectations of 117.5 at 117.2. We've got dairy auctions coming up later, as well as US current account and building permits, and depending on your time zone, later today or tomorrow morning, we're going to have New Zealand trade data. That's it from me. Thank you very much for watching, and have a great day.